One of the most common questions I get, and probably a lot of other traders out there as well, is how do I find high probability opportunities consistently? And of course, this will definitely vary depending on who you are actually asking. But I have set up a document here that I wanted to show you that may give you and at least help you gain some clarity on these very important questions, okay? First off, you need a system on how to find opportunities. That is very important, and that has to be your personal system, right? So, a trader that is actively trading stocks, for example, will probably work with scanners and systems or read the news, or there has to be some way to find these opportunities on a consistent basis, right? You don't just open up charts and start trading. That is not how things work, at least not for the good traders out there. What we do is, first of all, qualifying the markets that we are going to trade. So we need to qualify markets and find the markets that are best to trade right now. And we do that based on fundamental principles that we ourselves set up. And once you have qualified a certain market, then and only then you can start looking at entries, right, that aligns with your underlying thesis or idea for that market or sector. So I think the goal every day or every week should be, and always is, to avoid low probability trading environments and to find the environment and the markets or sectors that are in play right now that can produce high probability opportunities. That is the first task every trader should be focused on every day or week. So the market that you are trading or are thinking of trading right now has to be in a high probability environment, and depending on how you trade, that may vary. How you define that will probably vary. So an example is a day trader that trades stocks, for example. He might have issues competing at a normal trading day where the volume is average and nothing external is happening in that specific market. However, the same trader may have a much better chance at competing in the same market on a day where the volume is unusually high. We have news releases, earnings reports, unusual trading activity, stuff like that produces a totally different trading environment where maybe algos, for example, at least the same algos that usually run, may have issues or problems competing, right? So you have to find and search for the environment where you produce the best results. When I trade Forex, for example, I have a system I use every week to kind of sort out the markets that I might be interested in, and then I look at these markets only for the rest of the week, unless something else happens, of course. But typically on Monday or Tuesday already, I have a good idea of what I'm interested in, what I'm looking for, and what I expect to happen in different markets. That doesn't mean that I'm trading a lot, right? It means that I am looking and watching, waiting for high probability environments and opportunities to align. And that is very important. They have to align. So when I start my week in Forex, I typically look for markets that have news releases or events or, triggers outside of the actual charts that may drive price. That is what I'm looking for. And when I have selected the markets that I'm interested for the trading week, I typically just watch these markets trade on Monday, almost always on Tuesday as well, to kind of see how things react and what happens the days before, and of course at the day of the news release. These days are very important because the days before are typically, in my opinion at least, low probability environments, but the day at the news releases and after is where price typically moves. right? So at the day of news releases, we oftentimes see price manipulations and big traders positioning themselves and so on, and that is exactly what I am personally looking for, and that is what I'm trying to trade at all times. So I avoid trading in low probability environments, and I have defined low probability environment for me and my style of trading as the days where there is no activity. And that is very important. You will have to find out and understand when you as a trader actually have an edge and when you are best suited for trading, basically. So you can say that I look for these specific clues or signs, if you will, to enter, right? And I have rules exactly. This is what should happen before I enter, or this is what needs to happen, for example. And that has to do with order flow mostly. But again, I don't just put up random charts and start looking at order flow. No, it all has to align. The environment has to be high probability, the price manipulations has to be there, and after that, when all those things are on point, then I start looking at the entry context, right? But I don't stop there, because this also has to align with my bigger picture idea or underlying thesis for the market, without going too deep here, because to explain my entire process I would probably have to spend hours here with you, because I have developed this process over many years. But it all has to align, okay? So if I'm trading a dollar-based currency pair, for example, or a currency pair that is quoted in dollars, I will always also at the same time look at the dollar index, for example, and see what I expect the dollar index to do this week. So I will look at the dealing range, I will look at the reactions based on where we are. Are we right now coming from the low of the weekly and trading higher? Are we coming off the weekly high and trading lower? And that also has to align with my intraday trading idea or the trading decision that I'm about to make, for example. So a situation where the context, the dealing range, the fundamental drivers, the timing, the price, when that aligns with an intraday signal to enter, that is when I place my trade. All right. So this is how I find my trading opportunities. This is how I find them consistently. And that is how I find and select the markets that I'm looking at each week. So as I said before, right, I know many traders are asking this question and they want simpler answers, like go to this website and you can see the currency pairs you should trade. But guys, it doesn't work like that, and if trading was that easy, everyone could do it, right? But we already know that almost every trader, almost all traders fail ultimately. Almost all traders fail, instantly as well. So trading is definitely not easy, and it shouldn't be. Of course, it should not be easy. You don't want it to be easy, for that matter, because if it is hard, it means that if you actually succeed, there are big profits to reap, right? The traders that actually succeed and find alpha, develop alpha, find their edge and work on themselves, there are endless opportunities for them, and that is what you should be looking for, or you shouldn't be trading. That is my opinion. So simple and easy, of course, is great up until a point, but after that, I mean, again, if trading was easy, everyone would do it. So guys, this is how I do it. Maybe it helped you, maybe it doesn't. Anyway, thanks for watching and see you soon.